Money and credit. Money plays a very important role in our daily lives. It is used as a medium of exchange, and without it, buying and selling goods and services would be very difficult. In this lesson, we learn about the role of money, how credit works, and how it impacts people's lives. Money as a medium of exchange. In earlier times, people used the barter system where goods were exchanged for goods. For example, if a farmer had wheat and needed cloths, they would exchange wheat with a weaver for cloths. However, this system had many problems, like difficulty in finding someone who wanted to exchange what you had. So, money solved this problem. What is money? Money is a medium that is universally accepted in exchange for goods and services. It also acts as a measure of value. Modern forms of money include currency. It is paper notes and coins issued by the government. 2. Bank deposits. Money kept in the bank that can be used through checks or digital payments. For example, if you buy a book for Rs 200, the seller accepts money instead of exchanging it for another item because money is accepted everywhere. Loan activities of banks. Banks play an important role in providing money to people through loans. They accept deposits from people who save money and use those deposits to give loans to others who need money. How do banks work? People deposit their savings in banks, which are kept safe. Banks pay interest on those deposits. Banks use the deposited money to provide loans to others and charge a higher interest rate on loans. The difference between the interest earned from loans and the interest paid to depositors is the bank's profit. For example, if a person deposits an amount of Rs 1 lakh in a bank gives that amount to another person as loan and collects interest. If bank collects 800 rupees interest from the loan taker and gives 400 rupees interest to the depositor, the remaining 400 will be the bank's profit. Two types of sources of credit. Credit refers to borrowing money or taking loans. People borrow money for various purposes such as farming, business, education, or medical emergencies. 1. Formal sources of credit. These include banks and cooperatives. They are regulated by the government and the Reserve Bank of India, that is RBI. They charge lower interest rates. Borrowers need to complete paperwork and provide collateral, means security for loans. For example, banks like SBI, HDFC, and Bank of Baroda. 2. Informal sources of credit. These include money lenders, traders, relatives, and landlords. They are not regulated by any authority. They often charge very high interest rates. Loans are given without much paperwork, but may involve exploitation. For example, a farmer might borrow from a money lender when a bank loan is not easily available to him. However, the money lender may charge a very high interest rate, causing problems for the farmer. Terms of credit. Every loan agreement has certain conditions called terms of credit. These terms include 1. Interest rate. The percentage of the loan amount charged as interest. 2. Collateral. An asset such as land or property kept as security by the lender. 3. Documentation. Legal agreements that ensure repayment of the loan. 4. Mode of repayment. How and when the loan will be repaid. For example, a shopkeeper borrowing 1 lakh from a bank might need to submit property documents as collateral and repay the amount in monthly installments with 8% annual interest. Credit and its impact. Credit can have both positive and negative effects depending on how it is used. 1. Positive impact of credit. When loans are used productively, they can help people improve their standard of living or expand their businesses. For example, a farmer takes a loan to buy high quality seeds and fertilizers, leading to a good harvest and profits. 2. Negative impact of credit. If a borrower cannot repay the loan, it can lead to debt and financial problems. For example, a farmer takes a loan but suffers crop failure due to the drought, making it difficult to repay the loan. Formal sector credit in India. The government encourages people to borrow from formal sources like banks and cooperatives. The Reserve Bank of India (RBI) monitors these institutions to ensure fair practices. Banks and cooperatives provide credit at reasonable interest rates. Formal credit ensures safety and reduces exploitation. For example, self-help groups often take loans from banks at low interest rates and help their members start small businesses. Informal sector credit in India. In rural areas, informal sources like money lenders dominate. This is because banks are not easily accessible and paperwork can be difficult for uneducated people. Money lenders charge very high interest rates. Borrowers often fall into a debt trap where they are unable to repay the loan and end up borrowing more to cover old debts. Example: a small farmer borrows 5,000 from a money lender at a high interest rate of 10% per month. If the farmer fails to repay, the debt keeps increasing. Self-help groups for the poor. Self-help groups are small groups of people, usually women, who save money and give loans to their members at low interest rates. They also take loans from banks as a group and share the money among themselves. Features of SHGs. 1. Promote savings among members. 2. Reduce dependence on money lenders. 3. Encourage women's empowerment through financial independence. For example, a group of 15 women in a village saves 100 rupees each per month. After a year, they use the savings to give small loans to members for farming or business. Grameen Bank of Bangladesh. The Grameen Bank is a famous example of helping the poor through credit. It was started by Muhammad Yunus. The bank provides small loans, that is microcredit, to poor people, especially women without any collateral. Example: a woman in Bangladesh borrows a small loan to buy a sewing machine and starts her own tailoring business. This chapter highlights the importance of money and credit in our economy. It emphasizes the need for formal credit sources to reduce exploitation by informal lenders. It also stresses empowering people through self-help groups and initiatives like the Grameen Bank.